This lesson is going to look at Keltner channels and how we can use them in crypto trading. So, what are they? Keltner channels are used to identify potential price breakouts and also to measure volatility in the market. They consist of an upper band, a lower band, and a middle line, which might look similar to some of the other indicators that we've talked about, but there are some differences. The middle band of a Keltner channel is based on an exponential moving average of the price. So if you've seen the Bollinger Bands lesson, you'll know that Bollingers use simple moving averages, Keltner uses exponential moving averages. Another way it differs is the calculation for the outer bands. Whereas in Bollinger, the bands are calculated with standard deviations, the Keltner channel uses something called average true range, ATR. As you see, ATR is the average range between the high and low prices of a specified period, which you can set yourself on the indicator. The standard ATR range is 10, meaning that it takes the last 10 periods, the last 10 candles, and measures the high and low prices and takes the average of those to tell you how volatile the market has been in that period. Another way in which it differs are in the band widths. The Keltner channels have a fixed bandwidth based on a multiple of the ATR, and this adjusts along with market volatility. So you'll notice that the bands look a lot less volatile themselves than the Bollinger Bands. It is supposed to be this way. They are a little smoother because they are measured slightly differently. There is also a different use for Keltner channels, so we interpret them differently. The breakout above or below the upper or lower bands in a Keltner channel is considered a strong signal of strength or weakness. So in this instance, where we would use Bollinger Bands potentially for reversals and mean reversion, we actually use Keltner channels for trend trading. So why do we use them? We use them so we can analyze the volatility, and by observing the movements, we can gain insights into when a breakout is real, when it has strength, and when it may be a fake breakout. So, let's actually talk about a practical trading strategy you can use with Keltner channels. First, put your Keltner channels on and observe a coin. What you want to see is that the Keltner channels are respected for an extended period. Respect for the bands for the channel means it does not close outside of them. You notice in this example, for a very long period of time, it stays within the channels. There are only wicks above. There are no closes outside the channel. You can say this is being respected for an extended period. That's point number one. Number two, you then want to look for when price falls below and closes through the lower band, as you see here. It began to in this one, and this one confirmed it. This is a break. This is a change of structure, a change of character in the movement, and it indicates a potential bearish breakout, so you can consider shorting the coin. You can then use the EMA line as your entry point. You do not have to enter into a breakdown short here. You can wait for it to come back to the EMA line, the blue line, and begin to fill your short there. Your stop loss would remain above the green band because the thesis of this Keltner channel trade is that we're in a downtrend, and therefore the green band should not get hit, so it allows you to define your risk nicely. So this strategy can allow us to catch a trending move in the new direction, and we can ride the price movement within the Keltner channels and can be used exactly the same in reverse for a long. So if you want to take a long, do the exact same thing, just in reverse. The time you would exit is when it starts to respect the bands again. Right? You'll notice that it hits the lower band of the channel and keeps going through them, keeps going down through them, keeps going down through them, down through them. Whereas before it was respecting them. When price begins to respect the channel again, you can then exit. That is a very simple trading strategy using Keltner channels. In summary, they are more useful than Bollinger Bands for trend trading, and they're also useful, as with Bollinger Bands, for measuring volatility. So there you have Keltner channels, summary done. Let's move on to the next lesson.